If you run an electrical business in Sydney or anywhere in Australia, you already know that the gap between doing the work and getting paid for it is one of the biggest financial pressure points in the trade. You finish a commercial job, you invoice. You wait 30, 60, sometimes 90 days for payment. Meanwhile, your materials bill is due, your apprentice needs to be paid, and another job has come up that you cannot take on because your cash is tied up waiting on someone else's accounts payable department. That is exactly the problem business finance is designed to solve. And the good news is that electricians are actually in a strong position to access it. Let me run through your main options and what each one is best suited for. The most common structure for electricians is an unsecured business loan. You borrow between $10,000 and $150,000, no asset required as security, and the approval process typically takes a few hours. Funds can be in your account the same day you sign. Repayments are set as fixed weekly or fortnightly amounts so you know exactly where you stand every week. This is the right structure when you need working capital fast to cover a large material order, bridge a payroll gap, or take on a job that requires upfront spend before the client pays. If you need to buy a vehicle, a new ute, a van, or a piece of equipment, asset and equipment finance is almost always the better option. The asset itself acts as security, which means lower rates than an unsecured loan and terms that can stretch from 1 to 5 years. For most electricians, this is how you finance your vehicle and your specialist tools. The repayment is spread across the working life of the asset. If your business invoices commercial clients and regularly waits weeks or months for payment, invoice finance is worth knowing about. You can unlock up to 85% of the value of an outstanding invoice immediately without waiting for the client to pay. The lender collects directly from your debtor when the invoice falls due. It solves cash flow without adding traditional debt to your balance sheet. Now, here is what a lot of electricians don't know about the approval process. You do not need to own property. You do not need a perfect credit score. You do not need years of tax returns. Non-bank lenders assess your application primarily on your last 3 to 6 months of business bank statements, your average monthly revenue, and your existing commitments. If your business is generating consistent revenue, the eligibility bar is lower than most people think. The standard requirements are an active ABN registered for at least 4 to 6 months, monthly revenue of between $6,000 and $12,000 minimum, and Australian residency. That's it for most lenders. When comparing loan options, always ask for the total repayment amount expressed in dollars, not just the interest rate or factor rate. Some lenders quote a factor rate, which makes direct comparison difficult. The number that matters is what you pay back in total. The link in the description takes you to a free loan comparison tool that shows you options from multiple Australian lenders for your specific situation without triggering a credit check.